Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now in the today's class, we'll be revising SRS 4400, basically which is one of the standard under related services, audit related services. First of all, what are these audit related services? Generally, auditor he can be appointed not only for the purpose of assurance engagements, he can also be appointed for non-assurance engagements. These audit related services, they are non-assurance engagements. That means auditor he will not provide any opinion, he will not give any assurance in case of these services. Now in order to standardize the procedure that has to be followed by the auditor while performing these non-assurance services, the institute it has issued two standards under this SRS 4000 series. First standard is SRS 4400, which deals with engagement with respect to performance of agreed upon procedures that we will be discussing in the today's class. And in the next video, we will be revising SRS 4410, which deals with compilation engagement. Hope that is clear. Now, starting with SRS 4400. And what could be some examples of non-assurance services? Income tax return filing, consultancy, such type of services where you don't provide any assurance, or some of the examples for non-assurance services. Now coming into SRS 4400, this is standard, it deals with appointment of auditor for the purpose of performing certain agreed upon procedures. What are these agreed upon procedures? They can be any procedures. Now basically in these type of engagements, the auditor and the management or the client, they before performing the engagement itself, they will understand or they will agree upon certain procedures, and these procedures, on which financial information these procedures has to be performed, that financial information will also be decided prior to hand only, and what should be the format of reporting. All this they will be agreed between auditor and the management or the client. So because of this, the report that the auditor issues in case of these agreed upon procedures, it will be useful only for the management. Okay, general public they cannot understand this report, because general public they are not having idea of what procedures are agreed upon between management and the auditor. Okay, so in these agreed upon procedures engagement, specified procedures will be performed on specified subject matter. Subject matter means certain financial item like inventory or trade payables. On a specified financial matter, certain specific procedures will be performed. Okay, who will decide which item which procedure has to be performed? Prior to acceptance of engagement itself, auditor and management they both will agree. Okay, and see here you can find it, these specified procedures and the subject matter on which the specified procedures has to be performed will be agreed between client and auditor and any appropriate third party. Okay, between these people the specified procedures and the specific item on which these procedures has to be applied will be agreed. And here you should not confuse that auditor means only statutory auditor or independent auditor of the entity. It can appoint any person for the purpose of performing this agreed upon procedures. Hope that is clear. He need not be statutory auditor or internal auditor of the entity. Other than statutory auditor or internal auditor of the entity can also be appointed by the management for the purpose of performing this agreed upon procedures. Hope that is clear. And after performing these agreed upon procedures, auditor he will not give assurance, he will just report the factual findings. Okay, by performing these procedures he would have noticed certain facts, he would have come to know about certain facts. Those facts will be communicated to the management in the form of report. So issues report on factual findings and no assurance will be provided. Hope that is clear. And what could be certain examples of these agreed upon procedure engagements? Management, let's say for example, they are having doubt that the trade payable balances of the entity they are not showing properly. There are certain errors in the trade payable balances. So in order to find out these errors, management they can appoint a particular auditor, and management they will tell the auditor what procedure he has to perform and on which he has to perform that procedures, and what is the purpose of performing these procedures. All this will be agreed between the auditor and the client. Now auditor, what he will do, he will take the list of trade payables, he will compare the transactions with the transactions in those trade payable accounts with the respective invoices, and he will also get balance confirmations from the respective trade payables. Okay, by doing all these procedures, he will come to a conclusion. He will find the facts whether all the balances are correct or are there any errors in the balances. If at all there are any errors, what is the reason for such occurrence of such errors? Okay, all that facts he will find and he will communicate to the management. This is one of the example of agreed upon procedure. Here auditor, he will not verify entire financial statements, he will verify only that particular item for which he has been engaged. Okay, next, compliance engagement. This is also one of the example for agreed upon procedure. Compliance means there might be a certain law. Auditor might be appointed to verify whether the requirements of all that particular law has been followed by the entity or not. This is also agreed upon procedure. Or inventory audit, he might be appointed just to conduct physical audit of inventory and give a factual finding report to the management. This is also one of the agreed upon procedure engagement. Asset valuation. Okay, like this you can take various examples for agreed upon procedures. Now auditor, before he accepts the engagement, he needs to first of all agree, he needs to first of all create this engagement letter, and in that engagement letter the terms of engagement must be clearly defined. That is, what procedures you have to perform, on which item that procedures has to be performed, what is the nature, timing, extent of that procedures, and what should be the format of the report. All these terms he needs to beforehand only write them in the engagement letter and get it signed by both the client and the auditor. See, defining engagement terms. Stated purpose of the engagement. What is the purpose of the engagement? Fact that that this engagement, it is not an audit and no assurance will be provided. Okay, in the engagement letter itself you should clearly mention that this engagement, it is not an audit, it is just a agreed upon procedure engagement, so I will not be providing any assurance, I will be just finding out the facts. Okay, this has to be clearly communicated so that management, they will not confuse. Okay, they will not think that auditor will provide assurance. Okay, auditor, he needs to clearly communicate that I will not be providing any assurance in this engagement. And identify financial information on which procedures will be performed. Okay, on which financial information management is asking the auditor to perform the agreed upon procedures. That financial information should be clearly identified in the engagement letter. And limitations on distribution of the report. As I have already told you, this report which the auditor issues by performing agreed upon procedures, it cannot be used by general public, because general public, they don't know what procedures have been agreed between the auditor and the client. So this report, the distribution of this report that the auditor issues, it has to be restricted. Okay, it has to be restricted only to certain people. Even that point he needs to mention in the engagement letter. And the nature, timing, extent of specific procedures. What could be examples of certain procedures that the auditor and management, they can agree upon? Okay, inquiry and analysis, observation, inspection. What happened to this pen? Yeah, just a second. Normal general procedures only: inquiry, analysis, observation, inspection, obtaining confirmation, recomputation, okay, and other clerical accuracy checks. These could be certain examples of the procedures that can be agreed between the management and the auditor. And also, while performing these agreed upon procedures, auditor, he needs to comply with code of ethics. The fundamental principles he needs to comply. 5 fundamental principles are there, na? Integrity, objectivity, confidentiality, professional behavior, all that all that fundamental principles auditor needs to comply. Another important point, for performing these engagements, auditor, he need not be independent. Okay, independence requirement need not be complied here. Why? Because auditor, he is not giving any assurance, he is just telling the facts that he has found during his procedure. So for performing this agreed upon procedure engagement, auditor need not be independent. Hope that is clear. This point it is important. And elements of the report, what could be the format or the what could be certain illustrative elements of the report that the auditor issues. First of all, every report it will be having title and the address, right? After that, auditor he needs to identify on which financial information he is performing the agreed upon procedures, and he needs to identify that these procedures are beforehand only agreed between the auditor and the management. He should also list down what procedures he has performed during the engagement and what facts he has found with the help of those procedures. And he should also clearly communicate that in this engagement I will be just providing facts, I will not be providing any assurance because this is not a audit. Okay, all these points he needs to mention in the audit report. See, identify specific financial or non-financial information, statement that procedures are agreed with the recipient, statement that engagement is performed as per SRS. Okay, this engagement I have performed as per SRS 4400. This point he needs to mention in the audit or not audit report, this engagement report. And identify the purpose of the engagement, listing of specific procedures that he has performed, description of auditor's factual findings. By performing those procedures, what findings, what facts he has found, that he needs to describe. Statement that this is not an audit, so he will not be providing any assurance, he will just be providing factual findings. And statement on restriction of report. Okay, if at all, not if at all, this report it is not for use of general public, it is only for the use of management and any specific third party. Okay, such restriction paragraph should also be included in the audit report. And finally, you will be having date, place and signature, right? And regarding documentation, yes, auditor he needs to maintain documentation even in case of this agreed upon procedure engagement. Okay, for the purpose of finding facts, he would have determined certain evidences, right? Those evidences he needs to maintain in the form of documentation even for this agreed upon procedure engagement. Hope that is clear. By this, the revision of SRS 4400 is completed, a very small standard you can say. And this chart you can get it from the link that I'll be providing in the description. And if you want to purchase our classes, you can visit our website lecturepedia.in and you can place your order, right? And in the next class we'll be revising SRS 4410. I'll be winding up this class as of now. Take care, bye bye, see you.